Hello, traders, and good morning. It is December 14th, 2023, and welcome to the Apteros DMI or Daily Market Insight. This is our pre-market prep, and we're going to be going through our recap from yesterday and then prepping for today. So, yesterday was obviously a very volatile day. The announcement obviously pushing this market to the upside. And were we positioned well for that situation? Well, our lines in the sand were both bullish. We were monitoring the bullish side of things overall in this market, with scenario one being that we hold and stay above that upper line in the sand there. And essentially, we never really got below our neutral inflection. So once we kind of recovered that, from the overnight session, and then we kind of were holding it in the overnight session, we were watching that coming into the open in the morning, and we drove up from it. Didn't quite get to this neutral reference here, came back down to pull down into it. And these lows essentially holding as the lows of the day heading into FOMC. And of course, that's where we started to see the market really rally up from there, hit our overall destination at this point, and that was really the main idea for scenario one. Now, obviously, with such an extreme day, a catalyst involved, we push up through that area, pull back right to it. This is another opportunity if you were sharp and paying attention here to the upside. Once we accepted above that neutral reference, getting a pullback into that zone there, nice for continuation of the upside. So overall, we had the bias and we were positioned for it, and we had all the references for the major inflections, even with the FOMC announcement. All right. So let's move on and take a look at what's going on today. All right, so very similar situation to what we were seeing yesterday. Just kind of, let me make a quick adjustment here because I think one of these is off. Let me fix this real quick. Okay, so I fixed that lower line in the sand there. It wasn't adjusted correctly to what was going on there on the other time frame. So here's what we're looking at. Very similar plan to yesterday. The last 3 days in a row, we've actually had a very similar plan because the market has been generally doing something similar across the board. So we have an upper line in the sand here. This is our more bullish scenario at this point, and scenario one, which is what we are currently in, looking for the upside of that. Now, I had to go back in time and really find some neutral areas here as we were going up into this zone here. This is very similar. What we're experiencing right now is very similar to all-time high type of trading. The nice thing is that we're not quite there yet, so we do have some references in the past that we can use for targeting and things like that. So that's what we're kind of looking at today. So scenario one, holding up above that line in the sand there. We are above a neutral reference here at this point. We're kind of holding in that zone, looking for a possible continuation to here, here, and here. And that would be the overall highest destination for us today at the 48, 44s, okay? So that's just a rough outlook as to the pathway as possible with scenario one. Now, if we break down from here, in other words, if we start pulling back into that line in the sand, we're going to be looking and monitoring that scenario one. And if it fails, we're going to be heading into scenario two. And scenario two would be just a breakdown of that line in the sand and looking for that volatility to kind of push us down into our lower bullish zone here. Now, once we get into our bullish zone down here, it becomes scenario three or four. Obviously, scenario three is going to be a hold of our line in the sand there, heading back up into this bullish area here. And then scenario four would be a breakdown of everything, kind of heading down into this neutral area here. And then there could be a possible continuation to the downside here down to 46, 44s. But there is another stretch target down below here at 46.31. And this is just kind of following the neutral areas with acceptance, right? So what happens here is if we hold scenario one, everything stays the same. We remain bullish, and we continue to look for upper targets. If we push down into scenario two, this upper line in the sand here becomes bearish in nature, and this is a scalping opportunity for us to the downside. This lower area here is more or less where the bulls have control from a little bit more of a higher time frame perspective. So that's kind of what I'm monitoring for the overall bullishness in the market in general. This upper line in the sand really is more for the morning session, just kind of monitoring what's happening around this particular time frame and just holding above this upper bullish zone. Because then we can just stick with scenario one and continue to move up into upper targets and so forth. But like I said, if we switch to scenario two, it's a decent scalping opportunity to the short side for looking for some type of movement down back into our lower line in the sand here. All right. So mind your risk, trade your process really well, and have a great trading day.